webinar with the topic, the growing relevance of Sukuk issuance in emerging and frontier economies. So today's webinar promises to be very expository. But before we go to the webinar in full, I would like to invite the MDCO STL trustees for our opening remarks. Thank you.
Thank you very much. I believe I'm audible. Ew.
Yes.
Very well.
Excellent. Thank you so much. I say a beautiful good morning, good afternoon, or good evening to you, esteemed participants, depending on which part of the globe you're joining us from. On behalf of the entire team at STL Trustees Limited, it gives me great pleasure to welcome you most warmly to our webinar with the theme Leveraging Non-Interest Finance for Infrastructural Development. Just like our moderator said, this is a follow-up on our Series 5 webinar with the topic, the growing relevance of Sukuk in emerging and frontier economies. Well, for us as trustees, one of the pivotal roles we play in the capital markets is investor protection, among others. And this makes us to be passionate about investor education and enlightenment about different aspects of investing in the capital market, and also the different options available to investors and also issuers alike. We carry out this investor education by way of CSR and through our STL webinar series, which is now in its 6th series. Non-interest finance is widely known as Islamic finance, so it can be interchangeably used. However, despite the name, it is not a religious product in itself that is restricted to people belonging to the Muslim faith. But non-interest finance are a series of financial products developed to meet the requirement of a specific group of investors. When we talk about non-interest finance, it's a concept that is built on principles that uphold a positive ethical message derived from the Holy Quran. It's also derived from moral considerations and fair and just trading practices. Non-interest finance is also based on the principles of profit and risk sharing, transparency in pricing, equitability, fairness, and a business model that prohibits uncertainty. Some of the principles of non-interest finance include the fact that investment should have a social and ethical benefit to the wider society beyond just pure returns. Also, wealth must be generated from legitimate trade and asset-based investment. Risk is also to be shared between both the capital provider and the expertise provider, because under Islamic finance, both capital and labor are conceived as a single factor of production. Many jurisdictions have used this financial instrument to develop the economy, and the growing relevance of this financial tool underscores its potential as an alternative financing source of infrastructure and economic development. It is therefore a potential source of investment financing in both advanced and emerging economies, such as that of Nigeria. It is also a means of diversifying funding and broadening risk exposures at both institutional and macroeconomic levels. STL Trustees has been involved in the structuring of several non-interest debt instruments in the Nigerian capital market with varied categories of issuers, including the federal government of Nigeria, state governments, federal government-backed entities, as well as corporate entities. Indeed, STL Trustees acted as trustees to the first ever Sukuk issued by a state in Nigeria, and also the first ever Sukuk issued by the federal government. Our learning series today is aimed at providing viable, helpful, and quality information around the subject matter of non-interest finance, with a view to assisting our clients to make well-informed decisions regarding diverse financing and investing options available to them. There is so much misinformation of sorts out there about non-interest finance, and we shall be interrogating some of them at this webinar. Today, our guest speaker is none other than Malam Atahiru Machido. He is the Managing Director of 117 Capital Limited. He is also a seasoned expert in the structuring of non-interest financial instruments. And we have been privileged to work with him on several transactions and structures. And we have no doubt that our esteemed audience today will be gaining useful insights from his presentation on the topic. Our moderator, who is also our own in-house non-interest finance expert, is our Akioni, who heads the trust and legal services at STA Trustees. My name is Fumi Ekundayo, your host and the Managing Director and CEO of STA Trustees Limited. Distinguished participants, once again, we are truly delighted that you have chosen to spend 90 minutes of your time with us at this webinar. And we sincerely believe that you will find it time well spent at the end of it all. Please be reminded that you can drop your comments, questions, and contributions in the Q&A box, and they would all be attended to at the appropriate time. I thank you for your attention, and I will now yield the floor back to our moderator. Thank you very much.
For that opening remarks. So our audience, I welcome you once again. For our returning listeners that have been part of our old webinars, you're welcome back. And for those who are joining us for the very first time, I can assure you that you will not regret being part of this webinar. Before I call our speaker to deliver his paper, I think we need to assess ourselves to know our understanding and our embrace of non-interest finance. Put up our first poll, which says, do you consider non-interest finance as faith-based means of funding projects or as a commercial means of funding projects? Please, you have 60 seconds to click the button so that we'll appraise ourselves of our understanding of non-interest finance even before the paper is delivered. Thank you. I can see that everyone has voted. 60% of our audience believe that funded projects, while 40% felt it was a means of, faith-based means of funding projects. So it means Malam Machido will be talking to an informed audience. Finance is not just faith-based, but is a commercial means of funding projects. Thank you very much, our audience. Now I'll go on to introduce Malam Machido, who is our speaker for today. I'll read his abridged profile, which goes thus. Malam Atairu Machido, the MD CEO of World with a niche in Islamic finance. Prior to his current role, he was the pioneer CEO of Lotus Financial Services Limited, a renowned Islamic finance fund management firm. Malam Machido left his footprints as an implementer of many initiatives that bolstered the development of Islamic finance, not just in the company, but in Nigeria. He was instrumental in structuring the first Nigerian private sukuk al-Istisna issued by Lotus Capital in 2010. He also assembled and managed the first Lotus Islamic Equity Index Fund from 2009 to 2012. In 2013, Malam Machido was involved in structuring the first public sukuk issued in Nigeria, the Osun State Government Ijara Sukuk, which and the Islamic Financial News Awards in Dubai. Malam Machido was a director at Burak Capital Limited, advising the federal government of Nigeria and the Debt Management Office on sukuk issuances of 2017 and 2018. He has served in various capacities to ensure the transparency of the Islamic capital market. He is a member of Security and Exchange Commission's 10-year master plan on alternative products. Advisory board of MIT Global Group, United Arab Emirates, UAE, and Sri Lanka. Malam Machido is a fellow of the Institute of Chartered Economists of Nigeria, a fellow of the Chartered Institute of Management and Leadership, United States of America, and a fellow of the Institute of Islamic Finance Professionals of Nigeria. On behalf of our audience, I welcome Malam Machido. His deep knowledge of non-interest finance today. Malam Machido, I yield the floor to you. Thank you.
Thank you so much, Akin Oni, and thank you so much for me, Kundayo, MDC or STL trustees, for, as usual, well-articulated opening remarks. And let me follow your footsteps by saying good morning to us here in Nigeria and other places where we have similar time frame, that is morning, and good afternoon and evening for others that are in their respective region globally. And let me also, as usual, appreciate STL by following the usual path of creating awareness on this particular niche of Islamic finance model that is growing rapidly, which actually needs all of us to understand it, and as well as see how we can key in. We know that even though it is called Islamic finance, but we know that even in the Bible and some other Abrahamic religion, Old Testament and New Testament also forbid some of these things that Islamic finance is forbidden actually. And as a result of that, I consider Islamic finance as Abrahamic religious finance, if you look at it critically. And today's webinar actually, which is I think the 6th for the STL webinar series, which is leveraging non-interest finance for infrastructural development, like what MD CEO Fumi mentioned, that it is going ahead from the previous one, which was growing relevance of sukuk issuance in emerging and frontier economies. So this one is like going a step forward to see what we can do. Let me share my screen with the audience so that I will not be talking to myself alone. Please, I can do confirm if my screen is visible.
Okay, if I may just jump in now, Akin seems to be having some technological, but we can see your screen, Malam Machido.
All right, thank you so much. Thank you so much. So since I don't have much time based on the usual time frame, I know I have about 40-45 minutes max to deliver the paper, and it is actually so much, so I need to move a bit faster with respect to delivering and see how I can quickly touch some basic things referred to it. My paper outline today, of course, apart from the introduction, we'll just know a little about the principles of non-interest finance and some non-interest finance contracts, which I've already presented in our previous webinar of June, as well as the non-interest finance global statistic. Again, we see where are we going with respect, where are we with respect to the statistic globally, and then case studies, that is which I decided to to go to you, maybe to find out from the UAE, Sukuk issuances, and then case study here in Nigeria, and what can we do with respect to all this case study in order to emulate the other issuances. And now, with respect to the paper, we are very much aware that in the midst of current global socio-economic disruptions caused by Russian-Ukraine war, just after waves of COVID-19 pandemic called for innovative ways to finance economic activities, and with federal government of Nigeria mounting domestic debt of up to 20.9 trillion and a foreign debt of 14.72 trillion as at June 2022, mentioned by, or at least reported by the Debt Management Office, we need to be a little bit more concerned about the debt that our government is going into. The 2023 projected revenue of 9.73 trillion and a budget deficit of 10.78 trillion pointed at more debt will be sourced with budgeted debt service amount of 6.31 trillion, which is even about 65% of the projected revenue, meaning all our revenue are going to go into servicing the debt that we have. Hence, would be deteriorating the situation, economic situation in our country. The above statistic, like I mentioned, and 2023 budget indicated that more innovative ways must be explored that will reduce the debt service burden and bridge the infrastructural gap in Nigeria and similar countries that are in the footsteps of Nigeria. So leveraging on non-interest finance can provide accelerated infrastructure development, and that is why it is apt with respect to this particular topic of the day in continuation of the 5th webinar of STL trustees. As we know, based on the principle of non-interest finance, in Islamic law, money is not a rentable commodity. Thus, charging interest on money is usury, hence not permissible. All forms of interest, be it simple interest or compound interest, are prohibited in line with this particular mode of financing. And therefore, wealth should only be generated through legitimate trade and investment in assets. That is where it is expected for the wealth to grow actually. Legitimate trade or investment must be on permissible, tangible and intangible assets or project. And because they have to be tangible or intangible, that is where the developmental side of this particular mode of financing can easily key into it. And however, trading or investment in businesses that involve pork, alcohol, gambling, pornography, or other illicit or immoral activities are completely prohibited, which I believe in all the Abrahamic religion, some of these ones are also prohibited. And we know that general permissibility of contracts, unless specifically prohibited, is one of the major legal maxim of Islamic finance that we have, meaning all your contracts, apart from the one that we've already listed or that are specifically listed or mentioned in the religious books, all others, after you remove those ones that are listed, you are allowed to go into such kind of contract as long as you avoid the impermissible products or businesses. And therefore, as a result of this, Islamic finance instrument should be designed based on contracts to exchange goods for money or partnership shares for profit, which shall avoid interest, risk-free return, and other impermissible activities. Some of these particular non-interest finance contracts are, of course, like I mentioned, or I've already presented some of them as well in our previous one, are profit sharing and loss bearing partnership, which is a mudaraba in Arabic, a partnership in business whereby one party provides the capital and the other party will manage the venture. And therefore, meaning one party who is going to provide the capital is going to be a sleeping partner while the entrepreneur is going to manage the venture. It is equity-based contract with no guarantee of capital and or profit attached to this particular one. Likewise, the other one is musharaka, which is profit and loss sharing partnership, meaning if you have profit, you will share it. If you have loss, you will share it according to your capital contribution. This kind of contract is a situation where parties are going to contribute their capital in kind or in cash, and then they will go into one of them, or they will select somebody who is going to manage the venture profit will be shared according to their pre-agreed profit sharing ratio, but loss will follow the capital contributions of each partner. And we also have operating lease, just like the way we have operating lease in the conventional, meaning the asset belongs to the lessor until end of the transactions, and another entire legal documents will be prepared if there is need to transfer the legal ownership of the asset to the lessee. Therefore, it's a transfer of the usurer or benefits of a particular property or asset to another party in exchange for a pre-agreed rentals for an agreed period of time. We also have a Murabaha contract, which is cost plus the profit markup, is a sales contract that is only that a buyer, that a financier will go to buy the assets that a customer is interested in, and then come and sell it at a cost plus the profit markup, and the payment can be agreed on how it is going to be done. Buyers must be informed of the original price as well as the profit margin in line with the principle of this particular contract. We also have the other forward sales contracts, such as the manufactured forward sales contract and forward sales contract in terms of the agricultural produce, for instance. And we also have the agency contract, which called Wakala. Now, in line with the statistic, according to the IFSB stability report, the most recent one, which is 2022, released just about in June, the global Islamic finance services industry, IFSI, is estimated to be at the region of about 3.06 trillion in 2021, by the end of 2021. Out of this, a segment of it, which is Islamic banking, actually estimated to be 2.1 trillion. That is, it retained the highest share of 68.7% of the entire global asset of the industry. And Islamic capital market segment actually is 930.3 billion, which is 30% of the entire segment, which is 30% of the entire market share of the industry globally. And Takaful is just a mere 24.2 billion as at 2020. Now, looking at this statistic still from the IFSB stability report, Gulf GCC region actually happens to be controlling 52.4% of the total shares of the global assets of the Islamic financial industry, followed by the Southeast Asia that is controlling 23.5%. And of course, it is interesting to show that Africa is also coming up, and it is strategically being in a position also that is growing by the day, because African share of the global Islamic financial services industry was moving from 0.8% in 2018 to 2.1% in 2021. And so far, there are over 80 institutions offering Islamic financial services in Africa. So meaning Africa is gradually becoming a region to be noticing all these Islamic financial activities that is going on growing, especially here in Nigeria. And of course, looking at this particular statistic, since I already mentioned that most of the assets of this particular industry is in GCC, it is actually ideal to go to GCC and see how can we take a kind of case study from UAE, for instance. And I decided to use UAE for two reasons. One, it is a jurisdiction where they've been using a lot of Islamic financial activities, that is the banks as well as the sukuk, both by sovereign and sub-sovereign, as well as the corporate entities have been raising funds in order to do things. Secondly, because of the easy access of Dubai by many people, because of the easy accessibility through the visa, for instance. And of course, from this particular record of the Emirates Islamic Bank that they've been posting virtually on daily basis based on the indicative prices and yield of the sukuk they have been monitoring, at least we are witnessing about 58 of this particular sukuk out of 126 sukuk that were actually presented just yesterday came actually from the UAE, while others actually from Indonesia, Pakistan, Malaysia, and others that have the remaining 68%. And by the right side of this particular presentation, I have at least a red arrow to show the UAE side of all the respective issuances. And these issuances came from, like I mentioned, sovereign as well as corporate organizations. To mention just a few, at least we have most of the sectors in UAE that have access to Sukuk in order to develop some of their facilities or some of their projects, such as sovereign and sub-sovereign. We have witnessed government of Dubai, government of Emirate of Sharjah, as well as Ras Al Khaimah. They all access Sukuk in order to take care of some of their deficits. We also witnessed a lot of improvement in terms of the real estate development in Dubai. And as a result of that, there are both government-related real estate developers as well as the private real estate developers that have access actually Sukuk market in Dubai, and they've developed actually the real estate development in Dubai. We are going to see at least in Nakheel as a case study in order to test what the Dubai has been doing. We also witnessed financial sectors, Dubai Islamic Bank, Sharjah Islamic Bank, Noor Bank, Al Hilal Bank, and Emirate Islamic Bank, among others, that have also accessed Sukuk, similar to what Taj Bank currently is doing, which is closing on 28th of this particular month for their Mudaraba Sukuk, which is the additional tier 1 capital that has been approved by both CBN as well as the Securities and Exchange Commission. Similar structure actually was accessed by many banks in Dubai. We also witnessed the Dubai airport that has been constructed through issuance of Sukuk, as well as acquisition of the aircraft by Emirates Airlines, as well as Etihad Airways that have acquired the airlines in the aviation sector. Also in the transportation sector is not left behind, because some of the metro rails actually are being funded through the Sukuk, as well as the Dubai buses and taxis that are there on a formal capacity by the government. They all use Sukuk in order to acquire them. We also witnessed the park and recreation of Dubai, where many tourists are going in order to while their time and have their holidays. Also, some of the places have been built by the Sukuk, and then utilities through the electricity. Now, if you look at all these ones, then you can be wondering, then what is left in Dubai that has not actually been touched by Sukuk issuance? Because indirectly, Dubai has been improved rapidly by so many people that have gone in there to either issue Sukuk as a corporate entity, or the government issues Sukuk in one way or another. Now, let's quickly go directly to see in Nakheel Sukuk, which is the real estate that is government-related real estate development company, which is actually issued a Sukuk. Nakheel, they do have Dubai waterfront properties, which is the Palm Jabal Ali, which is similar to Palm Jumeirah for those people that are familiar with Palm Jumeirah in Dubai, but bigger than Palm Jumeirah. And they want to actually reclaim the land and do a kind of a man-made island locations, which similar to Palm Jumeirah, but it is going to be bigger than Palm Jumeirah. When they've started around 2008, when the global meltdown came in, actually set in, they've decided to slow down that particular construction, and therefore decided to issue Sukuk with respect to this. After they finish, this is what they intend to make the place. The internal one, which is similar to Palm Jumeirah, is going to be like a star to the entire construction place that they intend to do. And Dubai waterfront was expected to become the largest waterfront and man-made development in the world. It is planned to be twice the size of Hong Kong. And Nakheel, being the owner of that place for 51% stake in the Dubai waterfront, and being developed by Nakheel, one of the world's largest real estate developer. The original plan was to create a large development featuring commercial, residential, leisure, and hospitality spaces in that particular real estate project. This large project will have been constructed, like I mentioned, in a shape of crescent moon, with Palm Jabal Ali larger than Palm Jumeirah by 50%, forming a star. It is expected to house an estimated population of 1.5 million people in that particular island. And because of the issue of the global meltdown in 2008, and as well as Dubai world debt crisis in 2009, they've decided to stop that particular project till further notice. And instead of rather than to keep the asset idle, Nakheel decided to structure a Sukuk al-Ijara and raise 3.5 billion from this particular real estate piece of real estate that they have. The Sukuk proceeds were used to develop other real estate activities. Meaning, if we look at it technically, similar to what I presented in June in the fifth webinar, which is the family home Sukuk. Family homes, they already have existing houses and properties owned legally by the Family Homes Limited, and they want to use those assets in order to raise funds. So they sell these particular houses as well as properties to the SPV, and they've gotten their Sukuk issued by the SPV paid to them as consideration for the sales of these particular properties. Now they've taken that money, turned back, and continued developing other houses that they want to do. Similar thing here as well. This particular Nakhir actually sold this particular piece of the project, and they've used the proceeds in order to develop other real estate development. And then 3 years down the line, they come back and purchase it back, similar to still family home Sukuk, and similar to what the UK did in 2014, similar to what Hong Kong is doing, similar to even what Saxony and Halt in Germany did in 2004. So this is all similar structure that is also being done here in Nakhil. Now they came to raise $2.5 billion, and they've decided to, but after they opened and closed, they were able to get 2.5 times of the offer they came to raise. So as a result of that, they added more properties surrounding that particular project, and they've decided to absorb 3.5 billion. And out of that 3.5, they've decided to utilize the entire 3.5 in order to do some other real estate activities, like I mentioned. The difference between that one of the family homes and this particular Nakhil Sukuk is that actually they've decided to, their legal ownership of the project belongs to Nakhil Holding 1, which is a subsidiary of the Nakhil. And they also have another subsidiary called Nakhil Holding 2, which actually happens to be the lessee. So meaning they've purchased it from one entity and they've leased it to the sister entity, but they've taken all their relevant structure as well as enhancement around the issue. From the proceeds of that particular issue, they've decided to keep that for 3 years. They are not going to touch that one because it no longer belongs to them, but they use the proceeds in order to develop Jumeirah Park, which is actually a luxurious estate they've built in Dubai. They also decided to go and build Jumeirah Island, which they've already constructed and conclude with all that particular proceed. They went into the marina and built some of the high skyscrapers in marina with rest from all that particular proceed. And they also went into a free virgin land and started to construct all the infrastructures needed, as well as the landmarks, buildings there. And as a result of that, a lot of other real estate developers saw opportunities there and followed them and started to also construct other buildings there. And Jumeirah village is now constructed and being accommodated by many people there. They also, in the Palm Jumeirah, from the stem of the palm of the Jumeirah, they also have a 5-star hotel that they've constructed, but it's not a hotel. They are apartments that they are doing Manfa'a Ijara, meaning the time sharing to anybody who is interested to be going there periodically for his visit. Apart from all these ones, you can imagine the kind of trigger they were able to provide for all the relevant infrastructures that followed that particular project sites that they've decided to put this particular money into it. And yet 3 years down the line, they were able to get all buyers that are buying this particular assets, and they get the consideration and some other aspects, and they were able to pay back that particular 3.5 from the other sources of their income they were able to get. Now, if we are to look at these particular things that Dubai has done, and based on all the sectors that Dubai has touched with respect to the Sukuk issuances, then it's better we also come down home and see what can we do in order to see, based on our peculiar nature, what kind of Sukuk or what other projects can Nigeria do in order to bridge all our infrastructural gap that we have. Now that is what take me to case study for Nigerian Sukuk issuance for infrastructural development. A case study here that we are looking at is that we should be mindful of what I mentioned earlier. Nigerian budget for 2023 indicated alarming red alert. As a result of that, the budget of 20.51 trillion has a projected revenue of 9.73 trillion, meaning there is a budget deficit of 10.78 trillion, out of which about 6.31 trillion will go for debt services. That is mean about 64% of the total revenue that will be generated in 2023 will go into debt service, which is actually a critical alarming that everyone should know about that one. And actually, if government is going through this route, then we know that there will be a lot of issues that will come up with respect to our socio-economic activities. And as a result of this, Sukuk, of course, for revenue generating projects can play wonders in order to minimize the hardship that may follow this particular statistic. And for us to do that, the revenue that we are recalling here is Musharaka Sukuk. I've already explained the Musharaka, but quickly, as a reminder, Musharaka is a profit and loss sharing partnership where a relationship established under a contract by mutual consent of the parties for contributing capital. And this capital can be in cash or in kind. If it is going to be in kind, then there must be a valuation in order to know what will be the percentage of this particular kind asset that will go into the entire project. Then sharing of profit and losses in the business. It is, of course, like I mentioned, equity-based contract, which cannot guarantee neither capital nor guarantee the profit. Therefore, it is critical because there is risk related to this, and there are also issues surrounding some of our institutional investors that may frown at it and say they will not go because of the risk related to that. But the risk can be mitigated by the off-takers or the exit strategies that can be provided. For commercially viable projects with confirmed off-takers or exit avenues such as affordable housing scheme can be provided for this particular Musharaka Sukuk, meaning government and SPV that is going to act on behalf of the investors can act as partners into this particular Sukuk. And government provide land which will be valued and know the monetary value of this particular land vis-a-vis the total project cost as their own capital contribution, while SPV will go to the market and raise funds to be raised by the issuance of the Sukuk. Then the affordable houses can be constructed and sold to the civil servant as off-takers through either of the infrastructural agencies that federal government has established specifically to provide affordable houses to the civil servants and some other public officers, such as the Federal Mortgage Bank of Nigeria, the Federal Staff Housing Loans Board, the Mortgage Refinancing Company, as well as the National Family Homes that I mentioned to you, and the Federal Housing Authority. These are all institutions that government has established in one way or another for the sake of providing affordable houses. If we know that government has been pumping money into all these institutions, or in one way or another, these institutions can get actually revenue, and they're supposed to have all these people off takers that are taken from them, then government can easily sit down together with them and know how the exit are going to be done. And through Musharaka, meaning whatever revenue that can be generated from this one can also, a part of it can also go to government in line with that aspect, while the balance can go to the investors in line with their projected estimated revenue they are expecting. Now, quickly to look at the grammatical structure. Here we have, for instance, a government ministry, Ministry of Works and Housing, being at least under the purview of that housing activities, can act on behalf of the federal government of Nigeria, for instance, and to do what? To have the houses that are affordable, that can be offtake by the public or by the public officers or the civil servant that has been identified, or a cluster of the organizational staff that can be identified through the, of course, the Federal Mortgage Bank of Nigeria. Then SPV can be incorporated, which is going to be the other party that will go into the partnership with the Federal Ministry of Works and Housing. Of course, it will rely all its it will give all its powers, rights, and obligations to the SEC licensed trustees, such as STL trustees. And then they will rely, the SPV is going to rely on the Sukuk investors like the fund managers, the banks that are investing in such kind of instrument, and the HNIs that can also be key into this particular thing. So first is to know all the relevant documentation, such as Musharaka agreement that will be executed, because this particular instrument may go to Securities and Exchange Commission if it is not actually coming directly from the federal government of Nigeria. But if it is going to be under an agency of the federal government of Nigeria, it has to go through the Securities and Exchange Commission, being under the purview of SEC. So all the relevant documents will be filed with the Securities and Exchange Commission for the necessary approval if it is subjected to the public issue and to the SEC procedures. And therefore, after getting all the necessary approval, including the Sharia advisors of CBN, that is the Financial Regulations Advisory Council of Experts, as well as the Securities and Exchange Commission, if all the approvals is getting, then the financial advisors, the issuing houses will go to the market and sell this particular instrument and take the subscription from the investors, and then give the evidence of subscription as allotment to this particular successful investors. And the being SPV managed by the managed by the trustees, such as like I mentioned, STL will handle that capital and push it into the venture that will be agreed. After that aspect, after then the government will also give its own capital contribution in form of land that has been identified. And therefore, based on what kind of contract will this particular off-takers will take it, it may be in a form of ijara. Therefore, since we have in a form of ijara, that particular ijara we can have enhancement that we can even seek for the guarantee, necessary guarantee. Guarantee can come from either Federal Mortgage Bank of Nigeria to say they hereby guarantee whatever has been constructed or whatever are going to be constructed, they are going to provide the off-takers that are going to purchase these particular houses, and they continue their mortgage activities with them. Or for instance, the Federal Staff Housing Loans Board can also provide that one, or even mortgage refinancing company can also provide that guarantee. Now, after giving that guarantee, since we've agreed we are going into Ijara contract with this particular off-takers, then the houses can be delivered after construction, and deduction can be continued for a lease rentals to be paid into whatever account that will be provided, that will be managed by the trustees. And based on that, a profit portion in line with the profit agreed, in line with the profit sharing ratio agreed in the Musharaka agreement will go to the government, and the balance will go to the Sukuk investors through the SPV, and then that particular amount will go directly to the investors based on their periodic basis that will be enshrined in the prospectus and some other transactions document. Now, if we look at this particular one, meaning government is not going to take it as a debt, rather it is an investment that will even yield profit to the government, but all other things that may be loose items here must be taken care of in order to make sure that we provide necessary enhancement. This particular structure has been done in Qatar, where the Qatar Real Estate Investment Company, which is actually a real estate developer, actually went to the Qatar Petroleum employees, who is actually similar to the NNPC here in Nigeria, and cluster the employees and provided this particular structure where they have an SPV. An SPV went to the investors and raised the funds, and that particular funds actually was given as contribution, while the Qatar Real Estate Investment provided the assets, land in its own, and then all the necessary issues like I explained in our own structure followed, including the profit sharing ratio. This has been done to raise $270 million in Qatar. Now, the second structure quickly I can provide here is the Ijara Sukuk. The Ijara we are very familiar because all our issuances so far that we have witnessed in Nigeria are based on Ijara. The Osun State in 2013 is Ijara Mausufa fil Dhimma. The federal government of Nigeria is also Ijara, a forward lease Ijara to construct roads. Therefore, operating lease, transfer of the usufruct or benefit of a particular property or asset to another party in exchange for a pre-agreed rental for an agreed period of time, as the definition for this particular operating lease. We are very much aware that federal government of Nigeria has portfolio of roads from Sukuk issuances of 2017, 2018, 20, as well as 2021. And over 612 billion have been actually raised through this particular Sukuk. However, over 80 billion is being used per annum for the federal government of Nigeria, from the federal government of Nigerian budget to service their rental obligations on annual basis, 80 billion. And therefore, we are also expecting another issuance that may likely going to come very soon in this 2022 by the federal government of Nigeria, again, for the roads construction. And if that is the case, meaning government is having a lot of roads portfolio, but it is actually having all the obligations of servicing the debt. Instead of servicing the debt, I think because hardship is really coming, like I mentioned, based on the statistic of the budget, the roads can be revenue generating by introducing toll payments, by introducing toll payment, for instance. Other revenue generating projects such as railways, ports, urban mass transport, power plants that are really revenue generating with a good manager can also be used in order to raise sukuk to fund this particular project, because they can use their cash flow from this particular project to pay them their obligations. This is a federal government of Nigerian structure that I presented in the June webinar of STL, so I don't need to go deeply into it. But we know that federal government is interested in having the routes to be constructed, and it has given the allocations of the identified routes to the SPV, and therefore SPV was actually the legal owner of, or is the legal owner of these particular routes. And as a result of that, SPV went to the public and raised funds that are going to renovate these particular routes and then enter into a forward lease agreement with the government to take these particular routes on lease basis, operating lease. The government will continue using the routes for 7 years, and then it will buy back the routes, and therefore the routes will go back to the government. But at least it has been, it solved the issues that are needed. So this detailed explanation was done in the previous webinar for those that want to understand this particular structure. However, a new one probably is to see if there are need for buses to be acquired for urban mass transport in order to reduce the hardship that may likely going to follow the 2023 statistic of the budget. For instance, an entity such as the Ministry of Transportation or the investment companies or the urban mass transport can actually issue a sukuk with respect to this structure, where if it is going to be Abuja Investment Company Limited, for instance, being a lessee, it is going to have obligations to be paying rentals that are going to be paying periodically. Therefore, they are supposed to be a guarantor by a parent organization, which is the FCTA. And therefore, SPV will be incorporated, and that will rely on the sukuk holders. This SPV, all its obligations, rights, and others will be given to the SEC licensed trustees like STL trustees. So therefore, as a result of this, the guarantee will be provided. All the necessary undertakings to lease and to buy will also be provided. And then all the relevant documentations will be given to Securities and Exchange Commission, being an entity under the state government, that is the FCTA. It is under the purview of Securities and Exchange Commission, so it has to go to Securities and Exchange Commission for necessary approval. So all the documentations that are transactions document will be packed and be given to Securities and Exchange Commission for approval. After approval is given, the sukuk offer will open for subscription, and then the certificate for allotment will be given to those successful investors. And this sukuk proceed will be given to the necessary into the necessary account, which will be used in order to pay for the consideration of the spot buses that have been identified through a vendor. A vendor can be paid with respect to the consideration to acquire these particular buses at spot, and then delivery of the buses will be provided. As far as this particular stage is concerned, the buses legally are owned by the SPV through sukuk investors through the SPV. And therefore, as a result of that, the buses can be given in line with the lease agreement to the Abuja Investment Company or to any urban mass transport that has been identified. And therefore, based on the cash flow that these buses will be provided, will be servicing this particular sukuk, periodically rentals will be paid into a sinking fund account that will be managed by the SEC licensed trustees. And every 6 months, for instance, a payment will be paid into the sukuk based on the sukuk investors' respective investment. This can be done actually with respect to any commercially available projects, or at least over the counter asset that can be purchased. And at the end of the entire transactions, then a legal document can be executed that will transfer the legal ownership of these buses to Abuja Investment, and henceforth after that, the assets belongs to the Abuja Investment Company. This is actually another structure, but because of the time, I cannot continue based on all the contracts that we have, but let me quickly dwell into some challenges. Some of the challenges that will hinder leveraging on non-interest finance for infrastructure development in Nigeria, among others, are depth of knowledge and skills. From those people that are seeking for funds, they are not aware about this one, or those investors that are supposed to invest into it are also not aware about this one, or the public general, as well as the regulatory issues, actually have a little challenge with respect to understanding this particular kind of structure. We also have deficiencies in investors' confidence in management of revenue generating projects by the government agencies due to lack of fiscal discipline. This is very critical, which actually has to be taken care of, and blow off for necessary enhancement to be provided. Probably it can be taken care of if a confirmed as well as a reputable manager can be provided to manage on behalf of the project. That may likely going to solve some of these particular issues. Then we also have political will from the side of the government as originator, such as, for instance, sub-sovereign government like state government. You may have them moving slowly. They need funds because of the challenges, but they don't know about this aspect because of the knowledge, or they don't have political will to come into this particular arena. Then we also have religious coloration of non-interest finance. However, this religious coloration is reducing by the day, because at least since when the routes were constructed, it doesn't actually matter who is going to use the routes, but at least the routes are there. Not necessarily the Muslims that have raised or whatever it is. It's not meant for only Muslims, it's meant for everybody to use. So the religious coloration is reducing by the day here in Nigeria, and we hope it will continue to being considered as commercial ventures that everybody can do. Of course, the previous sukuk that have been issued, we have over 60 to 70% being invested by conventional bond investors that are usually investing in interest instruments. But yet, when they realize that this sukuk has all the necessary features they want in line with their securities, as well as in line with the enhancement, they've decided to key into it and invest heavily. And then efficient secondary market trading activities is also a hinder. If I invested into this particular sukuk and I have an urgent need of funding, how am I going to sell it? There is no efficient secondary market trading activities. Yes, there is over the counter, we've been doing it, but it is actually not as easy as it is in the other stock market like shares and others. This is where I can come to a conclusion with respect to my presentation, and I can hereby return the mantle of taking care of this issue to Akin Oni, our moderator. Thank you so much.
Thank you very much, Malam Machido. Can you please confirm that you can hear me? Okay, great. So I'm more than convinced that our listeners now have a better grasp of how non-interest instruments work. So we give thanks to Malam Machido for a full explanation of non-interest finance. I have some questions here, but I also implore our listeners, please drop their questions in Q&A box. But before I go to the questions that I have here, some of those questions have actually been answered by the slide on challenge. Before I go to the questions, I want to put a poll across to our listeners. Before your presentation, we had a poll which was treated by our listeners, and that poll was from the sell side. This second one is from the buy side. We want to see how receptive our listeners are or will be henceforth to non-interest instrument. So the question says, with the new information available to you from this presentation, will you be willing to consider investing in non-interest debt instruments? So we have 60 seconds to click the button. Okay. At the end of the poll, I can see that 90% of our listeners are willing to invest in non-interest debt instruments, 90%. Why 10% we still need Malamachido to convince them further? I think by the time the questions are answered, the remaining 10% will agree to invest in non-interest instruments henceforth. So Malamachido, let me read some questions that you have answered. And if you have further clarifications, you can give it before we go to other questions. The first question here says, why are state governments in southern part of Nigeria not issuing sukuk? I think that slide on challenges has answered that. Political corruption, lack of knowledge, and all sorts. So that is one. Another question says, what are the barriers to the implementation of Islamic finance schemes in Nigeria infrastructural project financing, and how can the barriers be managed? I also think you've answered that question. I don't know if you have any further clarification before I go to other questions.
Well, the barriers are usually the challenges. And as long as there is awareness, the reason why this particular Islamic finance is supposed to be welcomed by everyone is actually, it is developmental in nature. Why? Because Islamic finance, usually there must be an asset to be financed. Unlike the conventional bond where it can be abstract, the bond issuance is just based on the credit worthiness of the issuer. Whereas in Islamic finance, you have to look at the credit worthiness of the issuer as well as the asset they are going to issue. Because at the end of the day, you can also go back to that particular asset in the event there is any default. So as a result of this, actually, it is just lack of awareness that is hindering people from going into that aspect. Thank you.
Thank you. Muhammad Baba says, can we please have access to the recording on the slides? This will be made available to all listeners at the end of this webinar, and it will be linked to our website. So in another 24 hours, you can access our website for the recording. James Adedotu says, is non-interest finance only for government-funded projects? Or it can be used to finance individual projects?
Well, Islamic finance is not for, if we are talking generally as Islamic finance, is not meant for only government, because you can walk into any Islamic bank and get individual financing, which is also Islamic finance. However, if you are referring to sukuk, then sukuk is usually for corporate entities or government or some other structured organizations, for instance. Therefore, it is not meant for the individuals, rather it is for the companies. And it's not only for the government, but it can only be for a private company or a public company. And we witness that the family homes is a company limited liability. Yes, is being owned by the NSIA as well as the Federal Ministry of Finance Incorporated. But meanwhile, it is actually structured as a limited liability company, but yet it has accessed the sukuk. We are witnessing currently Taj Bank is a limited liability company, is a company, and it is still accessing a public issuance of a Sukuk Mudaraba. But yet we also witness a state government, Oshun, as well as the federal government. So it is based on the companies as well as the government, but not individuals on Sukuk. Thank you.
Okay. Adamo Sambo says that you did not dwell on the risk management associated with the use of non-interest finance in financing infrastructure in Nigeria. Risk management associated with the instruments.
My sincere apologies, Mala Adamu Sambo, for not dwelling into it. I'm looking at the time frame that I need to deliver my paper. And if I said I'm going to dwell into the risk management, meaning each particular contract, I have to x-ray it and provide its risk and provide the mitigants in relation to that one. I mentioned to you, for instance, Musharaka and Mudaraba, which are the partnership contract. They have their risk. And how can you mitigate that risk? You have to provide way of how you can mitigate it. Like I mentioned to you with respect to the Sukuk I presented. The Sukuk, as far as we have a party cannot give guarantee to the other party in the Musharaka. But because it is not the party that is giving guarantee this time around, it is the manager of the ventures vis-a-vis the off-takers. That is where the guarantee can come from, either NMRC or Federal Mortgage Bank of Nigeria or anybody to say they hereby guarantee these off-takers are going to purchase these houses. That is where the guarantee is coming. So it's not SPV that is giving guarantee or government is giving guarantee. So there is risk related to that, but how can you mitigate that risk? That is where I just showed in this particular Musharaka. If I go for a lease, therefore, I have to come up with all the takaful issues, how you can manage the issue to do with that. If I go for istisna or salam, all these ones, I have to x-ray each one before I provide the risk and say, this is how you can mitigate it. Unfortunately, the time will not permit me to do that. So I'm so sorry, Mala Adam Sambo. Probably off the record, we'll have contact on that.
Thank you very much, Machido. Dr. Ifedayo Shonde wants to know how you monitor the project in which Sukuk fund is raised for. Monitoring of Sukuk assets.
Well, with respect to that, all the governance structure in relation to the project must be well articulated and has to be agreed how it is going to be, because there are concerns that must be taken care of. For the federal government of Nigerian roots, there are project managers appointed by the trustees that are going consistently in the project sites to be given a report to the trustees that have gone into this particular route, and this is the project report, and they give project report consistently. And it is in line with that project report that the trustees are going to rely on to do some other action in relation to that. The one that I mentioned, for instance, Musharaka, yes, a project manager can also be provided and all the relevant reports can be provided in order to see what risk or how you can be monitoring the activities in relation to the project construction. Thank you.
Thank you very much, Malam Machido. Also to add that such report of the project monitoring consultants are also provided to the phrase if it's a regulated transaction.
Yes.
Please, Madam Machido, I have a question. I'll still have other questions here to ask. I will ask my question and would need your answer after this time out because we're going to have our recorded adverts in a moment. But my first question to be answered when you come back is, why is all issuers tend towards Ijara in Nigerian capital markets? You've mentioned various instruments, but everybody keeps coming out with Ijara. So maybe after the adverts, I would like you to answer that first, then we'll go to other questions. Thank you very much.
No problem.
STL Trustees Limited is a registered corporate trustee duly authorized and regulated by the Securities and Exchange Commission to carry out the functions of trusteeship in Nigeria. The company has been in the business of trusteeship for over 3 decades and is managed by a team of highly skilled professionals in all relevant areas to its functions. Over the years, we have built a remarkably outstanding track record and pedigree, and we are currently a leading trustee in Nigeria in terms of profitability and business size. STL plays a critical and independent role in many corporate finance, investment banking, and asset management transactions. As part of our corporate trust services, we render trusteeship services to issuers of debt instruments, including the federal government, state governments, federal government-backed entities, and corporate entities. Other core areas of our business include trusteeship of mutual funds, debenture trust issues under consortium finance and loan syndication, project finance and structured finance, real estate trust, custodial services, as well as private trust and estate planning. At STL, we are passionate about the well-being of our esteemed clients, most especially the need to create trust solutions that would assist them to create long-lasting investments and legacy. This would serve as a catalyst towards achieving their future financial goals and aspirations. It is in serving this purpose that we have created a bouquet of trust products under our private trust and estate planning services with varying features and benefits that would add value to our clients. At STL Trustees, our business model is consistently guided and driven by our core values of integrity, professionalism, commitment, and innovation. STL, service built on trust.
You are muted.
You're
You are
muted.
muted.
Oh, sorry. Welcome back, our listeners. While we will be taking more questions, I would like Madam Machido to answer the last questions before we take further questions from our listeners. Thank you.
All right, thank you so much, Akin, for that questions of why do we have all the sukuk issuances in Nigeria so far are Ijara sukuk. Now, if you look at the principles of Ijara, you realize that globally, all the scholars of all the school of thoughts, they've accepted the Ijara as really a Sharia compliant contract. And as a result of that, there is no contention whatsoever with respect to Ijara. However, with respect to still that Ijara, you can realize that it has a lot of enhancement security surrounding it. First, you have the ability to charge a kind of fees, a kind of rentals that can give you fixed return. So you can predict when you want to, what amount you are going to take at a particular period of time, unlike Musharaka and Mudaraba that it is just going to be estimated. But this one, you can predict exactly this is the amount and this is the time that it is going to be paid. And you know the return on investment based on the percentage-wise as our mindset actually put it in place. Likewise, there is also acceptance by the Sharia that principals can be delayed and be paid at the tail end of the transaction. So it fits into what federal government of Nigeria usually does with respect to the bond, being paying all the relevant interest on the conventional bond and wait until end of the maturity, until maturity before federal government pays the principal. In line with this particular trend, Sukuk al-Ijara also provide that leeway that the principal can be paid at the end of the transaction, which is going to be considered as the purchase for the asset back to the federal government of Nigeria or any other issuers in relation to that. Then also the issue in relation to the ownership of the asset. You know that the ownership of the asset still belongs to the issuer. That is mean you that already issued as an investor, the asset belongs to you, prorated to the investment you've already made. Therefore, the value at risk in relation to the Ijara is far, far lower compared to the conventional bond because you can rely on your asset. The asset belongs to you Sharia-wise until end of the transaction because it is operating lease. Until end of the transaction before you sit down and provide another legal documentation that will transfer the legal ownership to the lessee at the end of the lease contract. So that one can be either a donation or a sales or any other aspect. So it fits into all the relevant actually enhancement needed by the modern investors in line with that one. But that is what we have been seeing. Now I know that at least in Nigeria, we are having the Mudaraba Sukuk by the Taj Bank And we are hoping that Musharaka Sukuk will also come as long as we can have the exit strategy being put clearly, and therefore Ijara may slow down because it is still a debt that must be paid if the assets are not actually commercially viable or revenue generating. Thank you so much, Akim, for that question.
Thank you, Madam Machido. Before I go to the next question, let me acknowledge the comment of Madam Bintube. Madam Bintube is an authority in non-interest finance in Nigeria. It says lack of awareness is one of the key challenges of non-interest finance in Nigeria. Well done. Thank you, Madam Bintube. Aisha Madi wants to know if Mudaraba is inclined to interest rates given by the CBN.
No, Mudaraba actually is a profit, not interest. Because if you are into a Mudaraba, the contract is you have two parties or more. One party is going to be the manager of the ventures, while the other party is going to provide the capital. Now, who provide the capital has trust in the manager of the ventures, and you agree you are going to go into the venture. If there is profit, you already agree and you put it in the Mudaraba contract that this is how you are going to share the profit. So that particular profit is not known today. You have to wait until the venture is run and until the profit is declared before you know what portion of that profit will come to you. So it's not actually fixed, but rather it is estimated, projected based on the historical trend. That is what you are. But that historic base, but that particular projected may not actually be cast in stone. It may fluctuate a little above or a little below. It depends on how the structure is being provided. Unless if there are at least some reserve account that will be kept in order to continue smoothing that particular payout, that will continue making it as if it is fixed, but it's not fixed. But technically, it is actually not fixed, like what you mentioned. Thank you.
Thank you very much. Yomi Adebanjo wants to know, what are the efforts of the Islamic Council in propagating the ideas of Sukuk in Nigeria?
Well, I need to understand what Islamic Council are they saying with respect to the phrase, which is Financial Regulations Advisory Council of Experts are the Sharia advisors of the Central Bank of Nigeria. They are scholars actually appointed by CBN to review all the applications by the banks, as well as other public financial instrument that will go to the public in order to invest in such kind of Sharia compliant instrument. This, they are doing their best on their personal capacity as well as their collective capacity to continue providing awareness with respect to their respective domain. So they are doing it. If you are referring to Supreme Council for Islamic Affairs, it's not only Islamic finance they are, so they are not actually touching light with respect to that. Rather, they are the umbrella that are doing so many things. But we have scholars that have been doing webinars, that have been doing so many activities in line with that aspect. I remember one of the participants here, Dr. Adam Muhammad Abakar, who is raising his hand. I can see his hand raised here, is one of the people actually that have been creating awareness in the necessary fora wherever he found himself in order to tell people this is what Islamic finance or non-interest finance has been doing. So actually, these are the kind of council that we can consider that are creating awareness with respect to that. Thank you so much.
Okay, I'll take Dr. Adamu's question because you've mentioned his name. Dr. Adamu Abubakar wants to know that having highlighted of our subscription as one of the features of Sukuk in Nigeria, why is the federal government not frequently issuing Sukuk?
The issue with respect to the federal government not frequently issuing Sukuk is the budget issue. They've already identified in their budget, this is the budget deficit that I have, and out of this budget deficit, this is the times I want to come and this is the amount I want to come and issue Sukuk. Because the instrument or the contract that they are used to is usually a contract that they have to dip their hand in their budget to be servicing the debt with respect to the Ijara, for instance. But if it is Musharaka, probably government realize the importance of Musharaka or Wakala Sukuk, they may decide to be coming regularly. but awareness must be created, and that is why actually we're having that challenge at the moment.
Okay. We have 15 minutes to go. I want to believe we'll be able to answer a few more questions. This, I don't know if you want to respond to this from Lubo Elkana from South Sudan. It says, why is it that you don't make investment in South Sudan?
Is this question to me or is it to the STL trustees?
So, Lubo Elkana, we have seen your question, and appropriate answer will be given during response to all questions posed on this webinar. Abdurrahman Yusuf says, I so much love the concept of non-interest financing that I would love to do my PhD in Islamic banking and finance. Noted, Abdurrahman Yusuf. Alausa Abib says, on the success of Sukuk issuance, I think the information available to the public is the one that relates to FGN Sukuk. How successful has been Sukuk issuances by corporate institutions in terms of getting the target funds at the target time, also at an affordable cost?
All right, thank you so much for that question. Yes, of course, the success is landmarked by the FGN Sukuk, because in 2017, when federal government started to come for Sukuk, nobody actually, not much people understand what Sukuk is, but it came to raise 100 billion and it was able to get 105 billion. So at least it is oversubscribed. In the second issuance, people started to see the notice of the roads being constructed with Sukuk proceed, and therefore when it came next year in 2018 for another 100 billion, it was able to raise 134 billion. So meaning people started to understand. During the COVID-19 lockdown, everybody was inside the house, and the last 10 days of Ramadan of the Muslim worshippers, the federal government decided to come and raise 150 billion again. And after the closure, about 662 billion was actually raised. So over $500 billion had to be returned back to unsuccessful subscribers. And the last one, which is actually in December 2021, just recently, less than a year ago, federal government came to raise 200, and it was able to raise 834 billion, about 834 billion. So at least you can see the movement in line with understanding. But it's not only from the government, even corporate entities is following the same route actually, because the public issuance so far that we know is Family Homes Sukuk Limited. Family Homes Sukuk, Family Homes Limited is a company, like I mentioned to you, that came and raised Sukuk. They filed their application with SEC to raise 30 billion as a program, and their first series, they came for 10 billion. That 10 billion, when they came to raise it in July 2021, they were able to raise 21 billion. They had to take only 10 billion and return the 11 billion to unsuccessful subscribers, meaning at least it's not only federal government. Yes, recently, just now, actually quite not long ago, the family homes, again, they came for the second round of their balance, that is the 20 billion, and they were able to get at least 21.7 billion. So also that one is oversubscription by the corporate organizations. So it's not actually only aligned to the government, but it can also be for a corporate organization, depending on the enhancement that will be provided and the rate that is being put there as expected or as a rating that can attract investors. Thank you.
Okay, I have a question here that says, is it mandatory for Sukuk issuances to be regulated by the SEC? However, I have another question that is related to it, so I want to take it from the perspective of Moso Olowoyo. It says, can you state the difference between private and public Sukuk? So that will answer the initial question that I had here.
Okay, thank you so much. Like the first question, of course, is not only regulated by SEC, there may be private issuances as we've been witnessing. However, with respect to the distinction between the two, a private issuance of Sukuk is issuance that will not go to Securities and Exchange Commission, one, that cannot be advertised to the public to come and invest, two, that are not expected to exceed certain number of subscribers, such as, for instance, 50, above 50, they are not expected. All these ones are in relation to the private sukuk. However, when it comes to public sukuk, you can, and remember that a private sukuk, they have limitation on the investors that may come, because there are highly regulated institutional investors, such as the pension fund administrators, that cannot invest in such kind of instrument that are not licensed by Securities and Exchange Commission. So because private sukuk is not under the purview of SEC, these institutional investors will not invest in such kind of instrument. But however, with respect to the public, is the one that must go to Securities and Exchange Commission under the purview of SEC. It has to give approval. It has to go to Financial Regulations Advisory Council of Experts, that is the scholars of Central Bank of Nigeria, to give their fatwa, their pronouncement that the structure as well as the transactions document are really Sharia compliant before it goes to the market, to the public. It can be invested by all retail investors as well as public, as well as the institutional investors like PFAs, and it can be listed, and so many other advantages you can get. You can advertise it, and you don't have limitation to the number of subscribers. These are all part of the distinction you can see between the private as well as the public. I hope I'm able to answer that question.
Okay, thank you very much, sir. I also hope we'll be able to answer just 2 or 3 more. We have 9 minutes to go. Abiola Faremi, I want to believe your question has been answered. You mentioned that a private company should be able to leverage on sukuk opportunity, because we only made reference to to government issuances. This has been treated. The next one is from Babatunde Adejumo. Okay, Babatunde Adejumo is actually the Director General of DMO, Osun State. His question is, can we say all the sukuk issues in the country, particularly on the part of government, are real sukuk in terms of project self-repayment?
I don't really understand much about that question.
I think it's talking about asset-backed and asset-based repayment.
Okay, with respect to the asset-backed is usually a sales contract that is really real sales contract between the government to the SPV, meaning by extension to the investors. If we say the routes are being sold, if it is a sales, for instance, are we sure really that particular project or that particular asset is being sold legally to the SPV or to the investors? That is one thing. I remember, because he is from Osun State, the schools that were constructed in Osun State from 2013 sukuk that was issued for 11.4 billion, I think, can we say, if any default comes from that aspect, can investors or the trustees move in and take over these particular schools? That is where the issue may come actually. So we have asset backed, that you can have recourse to the assets, but asset based is usually recourse to the promoter or to the obligo in relation to that. So you have to look at the credit worthiness of this particular obligo before you go for the asset base. But asset backed is in relation to that particular asset. There is legal sales, which is more of actually that Sharia is more favoring than the asset base, in line with this particular distinction of the two. And let me also mention to you, Akin, because you mentioned that private companies to see how they can key into this particular aspect. A private company that wants to issue sukuk can do that, but they have to have an SPV, a special purpose vehicle that will be incorporated to be a PLC company. Again, a private company that wants to come and issue a public sukuk through an SPV that is PLC should make sure that he has a good stand in terms of his governance structures, as well as some other enhancement in relation to the structure he's going to be providing. I give you this example because the family home sukuk is actually from Family Homes Limited, which is a private company, not a public company. The Taj Bank Limited is a limited liability company, but they all have SPV that are PLC. And therefore, because it is SPV that will go to the public and tell public, give me your funds, subscribe to this, I will take this your fund and invest it together with this private company. That SPV that is going to the public must be a PLC company for it to go to the purview of Securities and Exchange Commission. Just for the explanation on that aspect. Thank you.
Very much, Malam. Bello Yahuza, I think your question has been answered regarding tying assets to revenue. And let me ask this final question so that we don't exceed our time. Malam Machido, what's the difference between ethical finance and Islamic finance?
Well, if we are talking about Islamic finance, it means the ethical finance and another layer of screening that will make sure that it follows the injunctions of the Islam, for instance. If we are talking about ethical finance, for instance, the ethical is usually screening the immoral activities in relation to where the funds are going or the businesses that are doing. But they may not actually screen some other elements such as the interest. If you know, once upon a time, or even now, we are having ethical funds. Sometimes before the Sharia funds regulations from guidelines comes from Securities and Exchange Commission. And these ethical funds that we have, we are investing in banks shares. And as a result of that, they don't invest in tobacco, they don't invest in breweries, they don't invest in anything that is harmful to the society. But they do invest in the shares of their respective parent organizations, which is some banks, for instance. As a result of that, they are ethical in nature with respect to that segment, that they don't invest in breweries, they don't invest in tobacco, but they do invest in shares of the banks. Therefore, they are not Sharia compliant. But if you say you are Sharia compliant, you have to also abide by all this immoral that the ethicals are taking. In addition to that, go to also as well as ensure issues to do with the interest, as well as some injustice activities must also be screened out. So these are the distinctions between the ethical as well as the Sharia compliant instruments.
Thank you very much, Malam Machido. I won't be able to ask further questions. There's always another time. But I also will leave the business of thanking you to the MD CEO, but on behalf of the listeners, I want to say a big thank you for the very educative and informative and expository delivery of your presentation with the mastery that is only expected of an expert like you. So thank you, Madam Machido. Now I'll call on my MD, Mrs. Fumi Akunayo, for our closing remarks.
Thank you so very much. Please confirm that you can hear me.
Perfectly.
Loud and clear.
All right, excellent. Wow, wow, wow. It's amazing. I really wish that we had more time, because I can feel that there are so many questions that people would have still loved to ask. But like my colleague said, there is still always another opportunity, and we always make that opportunity available, because we are truly and fully committed to investor education and also financial literacy. I will keep coming up with very germane themes for our webinars that you'll find very, very useful. So I have just about 2 minutes to make these closing remarks. And all I can say is that from all indications, from the presentation we've had and the discussions we've had around the table, there is huge potential in the non-interest finance that can be tapped into to fund the huge infrastructural deficits for developing economies, including Nigeria. Currently, with the declining revenue from the oil sector, which is also affecting the nation's ability to fund critical developmental projects in critical sectors, the federal government can definitely still explore the huge opportunity available in the non-interest financial space much more than it is currently doing to address these developmental needs. We also acknowledge the need to diversify the mode of financing developmental needs. It has become very crucial right now in Nigeria, given the kind of challenges we have with our revenue generation. We need to scale up this financing model We need to also use it to deepen our markets. We need to also use it to attract huge funds that are available in the global non-interest economy. And so many other reasons are the reasons why we're having this conversation today. Using Malaysia as a case study, for instance, the country has used non-interest financial instruments to support its infrastructural development, and data shows that more than 50% of the world's infrastructural sukuk was raised out of Malaysia. And the Global Infrastructure Index also ranks that country as the second most attractive destination for infrastructural development in Asia and the 5th in the world. Our guest, Malam Machido, has also made copious references to how the United Arab Emirates has also made exponential developmental strides with non-interest finance in the areas of real estate and aviation and so on and so forth. And similarly, I believe Nigeria can also adopt, we believe that Nigeria can also adopt the same financing model to close infrastructural gaps and grow our economy and deepen our markets. One of the challenges identified by Malam Machido is the dearth of knowledge. And this is one of the major reasons why STL is committed to financial literacy in this area, having participated in several non-interest related financial structuring in the Nigerian capital market. We believe that we can always contribute our little quota to addressing this knowledge gap. And that is why we are repeating the focus on non-interest financial space at this webinar. Let me, on behalf of all of us at STL and also all our attendees today, thank Malam Machido most profusely for his well-researched and brilliantly delivered presentation. We thank you so much for sharing your wealth of knowledge in the non-interest finance space with us today, and we look forward to you honoring our future invitations. For my colleague, Aki O'Neill, massive thumb up for doing such a great job at moderating today's webinar. I think the network was a bit funny initially, but thankfully everything picked up and we had a smooth conversation all through. So our amiable participants, we thank you for making it a date with us today. We shall be happy to assist with any further information or clarification you might require in relation to the structuring of non-interest finance. We're just a phone call away. Ladies and gentlemen, before I conclude these closing remarks, permit me to quickly recognize and acknowledge the presence of a few people in no particular order. Malam Adamu Sambo, thank you so much for attending. Malam Adamu Sambo was a deputy director at the Securities Exchange Commission, SEC. We also have in our webinar today, the DGDMO, Osun State, my brother, Dr. Babatunde Adejumo. Thank you so much for joining us today. Mr. Kumba Ajayi, I think I spotted that, yes. Mr. Ajayi is a worthy doyen of the trusteeship industry. Thank you so much for joining us, madam. I would like to also appreciate some of our returning attendees who have consistently attended about all our webinars, if not all, definitely most of our webinars. I see Mr. Goswigo, Mr. Kunle Aluko, Mr. Yomi Adebanjo, Toyin Olaogun, Tola Alakofa, Stanley Chikwendu, Mr. Francis Olawale, my chairman at the Ixan Lagos State chapter, Mr. Femi Shokon, several others that time will not permit me to mention. We really appreciate you. Several of our colleagues are also in this webinar, colleagues in the trusteeship subsector. We appreciate you all. Thank you most sincerely. We believe that the conversation today has been worth your while. We thank you so much for your participation, and we sincerely look forward to hosting you again at our future webinars. Thank you so much. Ayo, over to you.
So what is after the thanks? I want to say a big thank you once again, and I wish you the best and to enjoy the rest of the day. See you at our next webinar. Bye.